All right, let's talk about the biggest banking merger in a decade because everyone is watching this one. Today, we are breaking down the first major report card for the new combined UBS, and honestly, the results, they might just surprise you.
So, right from the top, the message from CEO Sergio Armati is one of absolute confidence. He's painting a picture of a flawless strategy, perfectly executed. But you know, in the high-stakes world of banking, talk is cheap. What really matters is whether the numbers back it up. So, let's find out if they do.
Make no mistake, this merger is one of the riskiest, most audacious moves in modern finance. I mean, absorbing a rival the size of Credit Suisse, that's a massive gamble. So the question we all have is this thing actually paying off?
And boom, there's your headline answer. $2.5 billion. Now, just to put that into perspective, that's more than the annual GDP of some small countries. And that's their net profit for just one quarter.
Yeah, that's a staggering number, and it tells us that something is going very right over there. So where's all this money coming from? Let's pop the hood and see which parts of this engine are firing on all cylinders.
First up, let's look inside that profit engine. We're going to break down where this incredible momentum is really coming from.
Okay, so what's really striking here is the sheer power you're seeing pretty much across the board. You've got global wealth management and asset management posting huge gains, but wow, look at the investment bank. That's the real star of the show, with profits more than doubling year over year. That is the kind of explosive growth that makes Wall Street stop and pay attention.
And when you dig into those investment bank numbers, they're just phenomenal. Global banking revenue, that's the part of the bank that advises on huge corporate deals like mergers, it shot up 52%. Now, what's truly impressive is that they're pulling this off while this massive complex project is happening in the background. So let's turn to the integration itself.
Having a powerful profit engine is one thing, right? But it's all happening while they're basically performing one of the most complicated corporate surgeries we've ever seen. So how is that integration of Credit Suisse actually going?
Well, this chart tells a really powerful story. Their total goal is to save around $13 billion in costs by the end of 2026. And look at this, they've already locked in $10 billion. That's a huge chunk of their goal, and get this, they are ahead of schedule. It's a clear sign that they aren't just talking about discipline, they're actually delivering.
And you know what? These aren't just abstract numbers. Migrating client accounts is a total high-wire act where one tiny mistake can lose you a customer forever. So getting over 2/3 of that done smoothly, that is a massive win. And see that bit about the bad bank? That's basically the portfolio of risky, unwanted assets they inherited. Winding down 94% of it means they've almost completely cleaned the slate, which is absolutely critical for their long-term stability.
Profit and progress are great, for sure. But in banking, everything, and I mean everything, rests on a foundation of financial strength. In other words, you need a balance sheet that can weather any storm that comes its way.
So the key metric to watch here is something called the CET1 capital ratio. Now, the easiest way to think about this is as the bank's core safety cushion. It's the highest quality capital a bank has to absorb unexpected losses without going under. So the higher the ratio, the safer the bank. Simple as that.
So how big is their safety cushion? Well, check out this chart. Their actual ratio is sitting at 14.8%, which is comfortably above their own target of around 14%. And that gap? That's not just a number, it's a fortress. It's sending a clear signal to regulators and the market that this new giant is built to last, even while it's undergoing all this massive change. Okay, so the quarter was a huge success. The integration is ahead of schedule and the balance sheet is rock solid. But this report wasn't just about looking back. It was also about laying the groundwork for what's coming next. And they're not just playing defense here, they are on the attack. They are making a huge push into the US, the wealthiest market in the world. They're embedding AI across the entire company to work smarter and faster. And crucially, they're getting out ahead of the conversation on new regulations in Switzerland, trying to actually shape the rules of the game for their own future.
So, by pretty much every measure, UBS is acing its post-merger exam. But the biggest test? That's still to come. Can they keep up this incredible high-flying momentum when the regulatory winds inevitably start to blow? That is the billion-dollar question that's going to define the future of this new banking titan.